if you would take this money and invest in Europe, then all our problems would be solved. The best category to invest in Europe is compliance software, because there's a big market.
There is a truth to it.
We're talking to Andreas Schwarzenbrunner today. He's a general partner at VC firm Speedinvest. When Peter Steinberger went viral earlier this year, Mark Zuckerberg called him. Sam Altman made an offer, but no European institution reached out. If you ever been told to move to San Francisco to build, Andreas today gives you the reasons you don't have to. He acknowledges that it's hard, but he also tells us where European hubs actually win, and he talks about the one fix that would change the math. Enjoy.
So I think if you really play at those strengths, then you can also be worldwide leading in certain fields. And I think that the wrong thing to do is to be average at everything.
The person who is right now building something extraordinary in, let's say, Vienna or Zurich or Tallinn and hasn't yet got the call from San Francisco, what do you want him to know about what's being built on this side of the pond? This is Melanie.
And this is Christian.
You're listening to Follow the Gradient, the weekly podcast with actionable insights about how to build a business while staying sane.
Andy, let's start with Peter Steinberger. He built OpenClaw in Austria. It goes viral on GitHub and then on X. Mark Zuckerberg calls him on WhatsApp. Sam Altman of OpenAI makes an offer over the weekend, and not a single European institution reaches out. So you watch this unfold from inside Europe, inside the system, also from your vantage point of a partner of a firm who's very active across the continent. What do you think would it have actually taken to keep someone like Steinberger here in Europe?
Yeah, I thought about that question quite a lot. And I would say the realistic answer is probably there is not that much that you could do, probably. And at the same time, what would be, I thought like it's a bit lost opportunity. For example, if you have companies like Mistral, them with their investors building something together with him would have been an amazing European story that you can pull off. They have access to capital, they have access to compute. They could probably are one of the only few who could scale that in Europe. I think like really building something like that and jumping on that opportunity. At the same time, of course, if you look at the access to compute in Europe, it's still a lot of it at the moment, especially when you look at researches in public hands and so on. So there you could have provided the means. You could have also provided, of course, the grants, and you could have also provided facilities and so on. There's some things that you could have done. Of course, you could have not provided the same amount of capital or talent or that US firms have. I think that is hard to beat. And at the same time, we probably could have given more, let's say, entrepreneurial flexibility / room to build, because I think this will look, of course, very different to Open. I don't know what they promised to him, but in reality, I think in the end of the day, it's probably going to be very different. And I think building something like that, I would say the most credible shot probably would have been Mistral.
What do you mean with we don't have the talent here? Because that there, I would say that I don't think is 100% true. I get the capital, I get maybe also the brand of this big tech, but I don't get the talent. Because if there's one red thread through our discussions and also what we see at the AI talent, then I must say that we have incredible talent. But maybe it's because of your definition of talent.
Yeah, maybe to be more precise, I think the right talent to scale a company to 100 billion plus company, right? I think if you look at also the key hires for a lot of European tech companies, where they have been coming from in the past, were a lot of from US tech. And because they have seen on how to build a company to a billion AR, to 10 billion AR, and also to IPO companies, to really, I think, like having the expertise, what it takes also as well on product and tech, as well as on the go-to-market side to scale a company. That is slowly changing, of course, because now you have a lot more European success cases, and now the leaders of the scale-ups of tomorrow are the ex-managers of Revolut and Spotify and so on. And now you have the European success cases that know how this works. But I think especially when you look at the AI space, then of course also a lot of European companies are also hiring people from the US, right? By the way, those are not necessarily Americans, like often they're Europeans, but they work for US tech companies. And I think this is still the case. There is more, let's say, scaling knowledge, scaling talent, would call it that way. I agree with you on the more, I would say, on the more foundational side, research side, and also talent in general. I think especially Europe has a lot to offer. But I think on more this managerial level and how to take company to the next phase, I think this is where we're still in the early days.
Exactly. Yeah, there I agree. And I also think this is changing. But of course, the US still is ahead of us when it comes to that. Now, I would like to dive a little bit deeper on the more structural level about this whole topic. You've written that European pension funds allocate 0.1 to a percent to venture capital. And in the US, pension funds occupy 5 out of the top 10 VC LP slots and allocate around 3%. So that's 25x gap. So please, Andy, walk us through why that gap exists and what it actually means for a founder trying to raise a Series B in Europe right now.
Yeah, I think why is this relevant? Maybe to start with that. In the end of the day, you have a few very large pools of capital, right? Those are banks, insurance companies, but of course in Europe also pension funds, and that is a bit different depending on different European member states and how they're structured. Some have a system where basically everyone who works pays in, and then you have it goes directly basically straight to the retired, and with a top up of the budget. So that's, for example, like the German system. But then you have others like more the Nordics or Netherlands that have more like a capital markets fixed system where they pay into capital markets pool. That's also why they have, by the way, more investment into VC. And the big problem is that what we have in Europe is that those big pools of capital when it comes to pension funds are not really allocating to VC. This has a few reasons. First of all, of course, there's this classic argument about risk aversion of Europeans when it comes to capital markets. I think second is also there's a cultural aspect of classic skepticism to capital markets. That's also why it's different in the Netherlands or in Sweden, because there it's also different when the perception of capital markets in general. Then, of course, there are certain rules that why they are not allowed to. And so there are certain frameworks within the European Union, but also within certain member states that make it more difficult to invest in venture capital and risk capital in general. And those things come together, so to say, lead to the fact that there are not that many, so that the percentage is quite low. Maybe a fourth aspect that sometimes gets a bit lost, but is also important, is there also has not been in the past a big VC ecosystem in Europe. So it was also often very difficult for them to deploy into VC as an asset class. First of all, performance in the past in Europe sometimes has been struggling. That has changed a lot over the last 15 years, but in the perception of many pension funds, it's still the case that European VC is not an interesting asset class. And second is also it was very small compared to the capital allocation they're looking at, right? You have to think about if you have funds that raise 100 million, and then you manage, I don't know, the Dutch pension fund, then what are you going to do? Usually they have a limit of up to 10% of the fund size. So that makes it 10 million, but deploy 10 million for the Dutch pension funds is like nothing, right? So you need to deploy 100, right? And I think this is also what, in order to make it really work, and this is also what has been a bit of a problem in the past, that you don't have depth, so to say, that you can also deploy big tickets. So that's a bit the situation. In the US, it's very different, because in the US, they have had a reform of their pension fund, and also in general about can you deploy in hedge funds, private equity, VC. That was called the ELVISA reform, which is in the 70s. And since then, the entire VC ecosystem ticked off, right? Some people never talk about that, but that was basically the foundation of the American VC ecosystem, because all of a sudden it was now allowed for the venture capital up to a certain amount. But that basically was the foundation of why there was so much capital flowing into that ecosystem. And something similar we could do in Europe as well, because if you don't invest like 0.12%, but 1%, right? This would be a game changer for the entire ecosystem, because the sums that we're talking about are so massive when it comes to pension funds, that this would unlock, of course, a whole new level of growth, and also would be for European GPs, but also for founders in the end of the day. I think this is the current situation. There's a lot of things happening at the moment where people talk about what are the barriers for insurance companies, banks, etc., for growth. And there are also a few discussions happening. Pensions, of course, are often still very national. That's a bit the problem, and very symbolic for many. People have to feel that you gamble then with your pensions, which is, of course, still in Europe often the perception. But yeah, I think there are many reasons, but I think many of those reasons are not true anymore. And that is, I think, where it needs also a mindset shift from their side, and at the same time, Europe needs growth, but it needs to be financed with capital and it needs to come from somewhere.
So much. And another aspect that I found striking when reading a recent news article that you wrote in a French newspaper is that much of the capital in the US venture funds is actually European in origin. So European savings flowing to Sandhill Road and then back to European companies at the markup. So is Europe literally funding its own competition, or can you please share more about this fact?
And that's the craziest thing. I think that the craziest thing is that a big part of LPs, of course, investors of US funds, are of course European, right? Because if you look at where Europe is still the third largest economic area in the world, we still have lots of assets and capital to deploy. China, of course, is out of the equation because they're not investing, at least not now, in the US funds in most cases. So there's Europe. And if you look at where, I don't know, Italian, French, German, Dutch money goes, then of course often it goes to the US. Also because it was often from their perspective, the best thing to do in terms of performance, right? So if you say, okay, I want to optimize on performance, then it was often a smart thing to invest more in the US and have more allocation or more exposure to US funds, but also US equities and so on. But in the end of the day, where at the same time, if you look at the scale-up gap we have, for example, scale-up funds or really companies raising 100 million plus, and the lack of capital also compared to the US, then it's crazy when you think about that a big part of it actually is European money that goes to the US. If you would take this money and invest in Europe, then all our problems would be solved. Which is, of course, not something that I don't know, someone who is like a chief investment officer at a pension fund would not say that, because their goal is, of course, to maximize performance under certain guardrails. Their goal is not to follow a political mandate, but they could, right? Because in the end of the day, it's our money, right? So they could follow, of course, a different mandate if you tell them to do. So I think there's a lot of potential. I'm not saying they should reallocate anything to Europe, nothing to US, but I think already, I don't know, if you reallocate 50% of what goes to the US to Europe would already make a massive impact.
Absolutely. Yeah. It's such an interesting fact. And maybe if we go away from pension fund, another bottleneck and another like second structural issue is regulation, according to you. And you've said that regulation in Europe has become a meme, which we also have seen again and again. But just to be very clear, you're not anti-regulation. You've written that Europe needs less regulation, but where it exists, it should be portable, predictable, and pro-growth. So what's the difference then between regulation that kills startups and regulation that actually gives them a competitive edge?
You know this meme with the ball caps? I think that's the most famous one, where it's like European innovation and then you have the plastic ball caps. I think, no, in general, I think there is no world without regulation. And even although the US sometimes talks about that, in the end, there are also tons of rules in the US, right? And it makes it also very hard for the national firms to work in the US and so on. So I think that is something that is still the case. So I think what I wanted to focus on also when we wrote the piece, so to say, is really, first of all, the main problem is that there is still 27 different regimes for most companies, right? If you are in healthcare and you are a European company and you want to expand to other markets, there's still tons of things that are different from each member state. And that is true for most industries. There's some that are more harmonized, and there's some that are still very, very much regulated on a national level. Let's look at energy, health, etc. So that would be the first step, that you basically create a framework where you have certain, or where you have certainty as a founder that you know that within those framework you can operate in 27 different markets, that would unlock enormous potential to grow, would not make every market expansion to the European market basically a full-fledged exercise where you then expand to a market with, I don't know, 10 million people, and it's the same amount of work as expanding to the US, which makes no difference. I mean, it makes no sense, right? Because why do you have the European Union? So I would say really, on the one hand, create one common rule book for the European Union for 27 different member states would already be a big topic. And this can also be that you have maybe, I don't know, a sector-specific license that you can then passport to all member states, or really also like more processes that you can do digitally. I always dream of a dashboard where you can, as a founder or as an entrepreneur, log in, and basically it tells me automatically what do I need to do that service in that country, right? And then at the moment, it's still impossible to find out, right? It's mind-blowing how hard it is actually for people to understand all of that. And that's why we always have this joke, or we had this joke multiple times, that the best category to invest in Europe is compliance software, because there's a big market.
There is a
in every.
truth to it.
Then I think really the second is also same is true for company rules, like company formation and so on. They have this big debate about EU Inc. and I'm a big supporter of that. And I think if you have a Delaware Inc. or like the EU Inc. for all 27 member states, where you have like certain rules that are the same for every member state, makes it easier to access capital cross-border, because there are many funds who still hesitant to invest in, I don't know, a Bulgarian company or an Estonian company, because they don't understand law in Estonia and they don't know how it works. And before they dig in and do their work, they're like, let rather invest in Germany, right? And I think, and that would make it so much easier if you have like a common framework to operate in and on the company side. Then, of course, then you have still topics around public procurement, where it's incredibly hard for startups to understand what they actually need to fulfill. Often the rules are so difficult that it's actually impossible for startups to compete in public tenders. You can easily all basically automate that, and you can make this easier for startups and decrease the hurdles that companies need to bring to the table in order to also allow them to tap into the pool. Because if you look at how much public spending there is in Europe, the sums are enormous. It's an enormous pool of potential customers and for startups to grow. And then I think that what is related to the first point, like harmonized rules across 27 member states and basically have like really one single market, is also true for things like the AI Act or GDPR and so on. It's still like you have a common European framework, and then every member state does with it what they want to, right? So it's not 100% correct, but for normal people, this is what happens. And then that means you have an AI Act, and then you still have 3 different AI Acts if you're in 3 different markets, right? So that makes it impossible for people to actually know what they need to really be compliant to it. It's a dream for lawyers and consultants, but it's a nightmare for entrepreneurs. And that is true for many different European legislations. And also, we need to make it more simple and more transparent and communicate better and actually what the rules are, because I don't know how often Switzerland is a bit different in that case, but I don't know how often you check potential progress on European legislation. Let's take the AI Act, right? Everything's published, because everything's in the European Union, everything that is going on is basically public, or at least the most of it, right? So the outcome of it, so to say. But you read this and you have no idea what it means. A, you have no idea what it means, and B, where it stands in terms of what does this now mean? Does this mean it comes next week, next month, 2 years, 3 years? What are the blockers? It's impossible to follow, and even people within the Brussels ecosystem don't know, right? So it's mind-boggling how, because we had this big debate about the AI Act, I don't know, a year ago or so, and everyone was like, oh yeah. The reality is, so far, nothing has happened. And Bobby, nothing will happen for the next 2 years, right? That is also what makes it extremely complicated and difficult for entrepreneurs to have like kind of a framework where they know they can operate in, especially in new technologies.
Yeah. And Maybe on this point, I want to challenge you a little bit, and it ties very well to that we talk a lot, it's written a lot, like we speak a lot, but what is the actual concrete thing? Because also Speedinvest has the Build in Europe initiative, so you publish content, you are a very engaged policymaker, also from your previous role, so to say, so you're very interested in that topic. You speak at conferences, you speak at our podcast, and many others. But from the outside, one could be also a little bit mean and say it looks like just like the awareness building more than really a structural change. So, what do you think is the concrete output of Build in Europe that a founder can actually point and say, this made my life easier?
Yeah, it's a very fair point, but I think it's a very fair point if people don't know how politics works, because the reality is their job is to talk, right? That's their job. And awareness building and making them understand how it works is an important part of that process. And I think being, I don't know, for example, next week I'm in Brussels and we have a meeting with the European Commission and a few other investors as well. And I think there's this initiative now in UK where you have this AI body in UK where a lot of VCs are also engaged and so on. I think being engaged in those initiatives and having those conversations is an important part of it, because it sounds now, I don't know, disrespectful, but many politicians who make those decisions have no idea how our industry works, how VC works, or how startups work. And it's like being part there and being in these meetings, although often they're very annoying, is an important part of this process. There was, I don't know, it was a German philosopher like Max Weber. I don't know if you ever heard, but he basically said politics is basically, in German, he said, the Sport harter Bretter. So it always is, you need to, it's like always it's small steps and it takes a very long time until you really get there. And I think that is an important part of it. But I think it's fair that people said, okay, yeah, but why not take this time and then we build cool stuff? I think it needs both. I think it needs both. I think it needs to be the awareness, because I think a good example is Mario Draghi's report that everyone has read, right? You can now argue what really happened after that. Not that much, actually, because they tracked the progress of the Draghi report. There's not that much. But at the same time, it is that everyone talked about it. Like every government leader, I can guarantee you, and every minister in Europe has read this thing. And they're like, oh yeah, as I have read in the Draghi report, we need to do ABC, right? So it's important that someone does this work to basically make them aware what the issues are and what we need to do, because they're often so far detached from this world. Because you have to imagine, I don't know, like they're meeting 6 VCs and 3 founders and talk about whatever, and then they go, I don't know, and meet 3 farmers and talk about what's the problem of farming, and they're also telling them this is the most important issue on the planet, and everyone tells them this is the most important issue that you need to solve, because of course everyone has their own interest, and often they're coming from very different backgrounds. So I think it's an important part of it, this awareness creation. So yeah, but it's frustrating also because you talk about the same stuff all the time and you think, okay, but why does it really lead to? But at the same time, look at EU Inc. I think they achieved a lot, right?
Yes. And we had Andy on the podcast, and it was fascinating how this really brought the community together, also the founders, not just the VCs or the policymakers, but really the founders. And I think there lies also a strength. And just to comment on your thing, like I also sometimes talk to politicians, and I know there is still a lot of education to make, but we have to do it. We also have to find some time how we educate them, because otherwise nothing changes. So absolutely.
And he said, once he said to me, the next thing we need to do is something like EU Inc. for capital markets. And I think it's true, right? If some people just do the work, they educate politicians, they get the community together. It's a lot of work. EU Inc. also, if you talk to him, right? It's basically a full-time job, right? to get this going. And if you can basically get the same for capital markets going, which there has a lot of happened in the last 20 years already, but then I think you can really make a difference. But some people just need to do it. And I think this is how change in politics happen, although sometimes it then takes years until it really becomes reality.
And you have, on the politics side, you have proposed in the past 4 very concrete reforms. You've spoken on reform of Solvency II capital charges for VC. Also, you alluded to that, the ability for pension funds in the EU to invest in VC and build a platform there to unify startup visas across the European member states and to build out this 28th regime. So if you could really only get one of these done in the next 18 months, which one would it be and why?
I would say capital, because everything else follows. It's if you have 10x more capital that is invested in technology and growth and entrepreneurship in Europe, then everything else will follow, because it will be a more attractive career path. A lot of things, it will be a more important part of the economy. So it will gain in relevance also in getting reforms done for that part of the economy. So I think in the end of the day, capital at the forefront, and most of the rest follows, I think. There are often debates about the other way around, right? But I think that's the biggest difference in the US is just the amount of capital and also access to capital via capital markets and other things. That's their biggest USP they have. Everything else, they're not better than we are, but that makes it's a difference if you can raise 100 million or a billion, because that in the end dictates the game.
And we've talked about the talent side before, and you guys also invested in Mimic. Mimic is a Zurich-based physical AI company. We had also the co-founder on the show a couple of months ago. And I think that's exactly the kind of company we want to build in Europe. So in your perspective, what makes Mimic possible in Zurich, in the center of Europe, when so many other companies end up in Silicon Valley?
I think Mimic is in the heart of their specific topic, right? I think you have so many different ecosystems globally for different topics. And if you look at the intersection of robotics and AI, I think Zurich is worldwide leading. And that, I think, gives them an extreme advantage also in terms of capital, in terms of access to talent. And that's why I think they have, for them, it's not a disadvantage to be in Zurich. I think it's rather an advantage. Of course, it's hint certain, as to say, limits as once you scale, because it's still, I would say, comparably small city. If you really want to scale a company, you need more talent and so on. But I think they really can learn a lot and build a lot and do a lot in the Zurich ecosystem. And also, if you look at all the robotics meetups, if you look at all the other players that are on the market, if you look at ETA and what is happening there on the robotics side, I think for them it's really a structural advantage. And also in the perception of international investors, right? The Mimic guys also have the advantage. They say, okay, yeah, we're ETH and so on. It's also something that the US investors understand, right? It's a brand by now, especially when it comes to robotics. So I think for what we need to do in Europe is exactly play these strengths for certain ecosystems, right? If you look at also, I don't know, life science and pharma, there are certain hubs in Europe worldwide leading. If you look at robotics in Munich, but also if you look at defense in Munich, for example, now there's so many defense companies in Munich, right? So you really, in Paris, AI with many companies now. So I think if you really play at those strengths, then you can also be worldwide leading in certain fields. And I think that the wrong thing to do is to be average at everything. But I think really there are a few things where you as a hub can be really excellent at. And then I guarantee that also international investors will come there, because they know that what you get there is world class. And this is, I think, the case for Mimic and ETH, and as when it comes to robotics, or the intersection of robotics and the AI, or as everyone now calls it, physical AI.
What do you see these types of founders who really build and then build from here in Europe? What do you see these founders do differently to the ones who leave? One thing we heard on the show in the past was that we obviously have highly regulated and fragmented markets in Europe. Some guests have actually argued that this is in the long run a strength, because you're faced with complexity very early on. So can be a bummer in the short run, but a winning point in the long run. What's your perspective on that? What do teams here do really differently?
I think what teams in Europe definitely do differently is they think internationally from day one, because they need to. You always think about what is the next markets I can expand to, what else. You always have this international mindset, and because you need to expand, because every market is too small in the end of the day if you really want to build a big company. I think The second is they also work with very, like I said, diverse international environments in terms of talent, in terms of setup. I think that's a bit the beauty of Europe. The third, you mentioned it on the regulatory side. I'm not sure it's an advantage. I think it's more a barrier to entry for others, because you think about it twice if you really want to do that. That's also why many US companies in many fields are not active in Europe. Only when they reach a certain size, and then they're really big, and then they need new markets to grow to, and then they come to Europe. But at the beginning, often they don't, because it's too complex. And that is, I think, it maybe buys you time, but it's not an advantage long term, I think, but it buys you time. And I think that is, and then I think what also is a bit different in Europe, and this is, by the way, to mimic, we also do have in a lot of areas and sectors, we also do have still a very strong industrial base. That is also true for other sectors. But also, if you look at robotics, this combination of startups and also industrial companies, if you look at automotive, if you look at machinery, etc., working together, that is still in Europe very strong, and also in other sectors. And you have this advantage that you also need to work with those companies in order to scale, especially when you will really want to build something for, say, the real world. If you stick to the robotics example. And I think that is an advantage, because those companies still often produce in Europe. They often do have the R&D here. They do have innovation here. So there, I would say, I'm very much at the forefront of many of those trends, much more than of US companies. There, it's much more startup driven versus corporates that are, because they outsourced everything over the last 20, 30 years, and there's not that much left. But we still have a lot of industries where they're very active in Europe, and also that have a strong interest in automation and productivity and AI, because in the end of the day, that's the lifeline of in the future. So I think that is a bit different here as well. Yeah, I would say those are some things.
So maybe last question before, yeah, go ahead.
And maybe one last point
Yeah.
is, I think one last point, and this is probably the most important one, is you learn to do more with less money, right? I think that's definitely a difference, that you just don't throw money at it, because also you have startups in the US that just then pay engineers $1 million a year, and you're like, what the? And then you have like European companies who are like, why can I not pay my engineers like $1 million? But I think you learn to do more with less capital, because that's just the reality of the market.
And so last question before we go into rapid fire questions. If Peter Steinberger is listening to this, or the next Steinberger, the person who is right now building something extraordinary in, let's say, Vienna or Zurich or Tallinn, and hasn't yet got the call from San Francisco, what do you want him to know about what's being built on this side of the pond?
Yeah, I would frame it differently. I would say this is your opportunity to build it at this side of the pond. I think I would need to take people a bit by the ego and say, this is your chance to really make an impact on Europe and really do it yourself, and others that help you doing that. But I think it's really that in the end of the day, I would tell them, if you build something great, this is your chance to really make an impact on this continent. And then, yeah.
I think the time's up, so we're moving to the rapid fire section, which is our last section, which basically means we're gonna ask you a very short question, and you can answer in one sentence with whatever comes to your mind. So, EU AI Act, you have mentioned it. Necessary guardrail or an innovation break, in your opinion?
Innovation break.
One European portfolio company you think will be a global category leader in 5 years?
Many, and everyone will be now mad if I say something different, but Munich.
Of course.
The single biggest waste of time in European startup bureaucracy?
Compliance, like all different kind of, from GDPR to order to whatever out there is that people need to deal with.
And one thing European founders do better than American founders?
In terms of, we not only talk, we also do deliver.
Love it.
Cool.
Thank you so much, Andy, for being on our show. And now, maybe last question. If people want to reach out to you, if they want to read more about what you are saying, learn more about your background as a policymaker, where do they find more information about you?
We published a few things about building Europe on our website and also happy via email. So it's andreas@speedinvest.com. Also, I post a lot on LinkedIn. I found it extremely cringe in the past. I never wanted to do it, but it works really well in terms of input versus output. Yeah, it's just one of those things we talked about before that you need to also talk about it. Otherwise, it won't happen. And yeah, also there you can reach me.
Awesome. We will add all the links and kind of stuff that you posted about in our newsletter so people can also read it there. Thank you very much and talk to you soon.
And this was another episode of our Follow the Gradient podcast.
And now we would love to hear from you. How did you like it? What should we improve? Do you have any suggestions, ideas, or dream podcast guests? Please let us know.
Thank you and see you again next week.